Thanks for joining us on Squawk. I'm Bruce Whitfield. You're watching CNBC Africa. First with Business Worldwide. David Shapiro from Sasfin and Viv Governor from Vunani Private Clients here to unpack the week's market news. Sorry, Viv. I know that you mean well. You've got so much to say, you say it really quickly to fit it all in. New vehicle sales, of course, up on the week, but the big story at the moment is Morsi. My joke, I like it, I'm repeating it, happening in Egypt. And you watched this Egypt story quite closely.
Yes, as I said to you before the show, this is a philosophical argument. You have a person that most of the country wants out, and yet he was elected democratically. So
a year ago.
A year ago. So in this case, yeah, what is the right way to go? I mean, you can't have a person basically in power that is doing things that you just don't want to do. You don't have the one vote, one time kind of scenario that people see around the Arab world. At the same time, there has to be some kind of rule of law in which if you do win an election, you should have some special abilities, like putting through things that maybe not other people, maybe your opponents may not like. That's the privilege of winning an election. I think the latest is that he has folded, or he has been folded by the military.
He has been folded
by the military. And the question then arises is, what's going to be the new situation in Egypt? And the military in Egypt is incredibly powerful. They own about a third of the economy. Literally, they control like farms, etc. They're totally outside the scope of a normal military. And so the military leaders themselves are incredibly wealthy, oligarchs in their own country.
Isn't Morsi the first non-military leader Egypt's had since, 1950s or something?
Yes, that's exactly. And the last time that they had a democratic elected leader, the military came in and kicked him out as well.
Yes. Okay, so this is more of the same then from an Egypt perspective. Do we care, David, other than this is a country in turmoil?
My people fled Egypt about 4,500 years ago. So.
You could see it coming. You knew it was coming. But here's the situation where Egypt is strategically located. The Suez Canal is there. The oil price has been ticking up, and that's one consequence for us.
They worried, and I think the military was worried about the unrest spreading to other sectors as well. They're always concerned about some of the other oil producers may also take the lead from Egypt. So once you're seeing the unrest a second time round, military stepped in, and I think that Morsi had gone the wrong way. I think he had come into power, everybody had backed him initially, but I think his policies were starting to shift to an area that the population didn't really believe or support. So change came. And I'm pleased with the military that they quickly squashed the situation before.
You're pleased
really
with the military for now, David,
yes,
but does it guarantee stability?
No.
Does it guarantee a democratic future for
But they said we need an election, in a very short time, we need another election. So it's not as though they're going to stay there. But I think they do want perhaps a stable second choice. I don't know who's going to come in there now, who's going to be able to actually rule. So I still think it's going to be quite a fluid situation for time to come.
But from a market's perspective, do markets care about Egypt, or is markets priced in Egypt as being not a breadbasket but a basket case for the foreseeable future?
I think Egypt is kind of like the Eurozone. As long as it doesn't blow up in everybody else's faces, they can go and do their own real business. As long as we don't have a situation where Egypt foments revolution like we saw in Bahrain.
Well, you look at Syria, you look at the tragedy unfolding in Syria at the moment. Again, it doesn't have a financial impact on us, but it's a human tragedy in the Middle East. A stable Middle East is a better Middle East for the global economy.
Yeah, but it's internal. So as long as it doesn't spread outside their borders, it doesn't really affect the world. I mean, there's not much investment, for most investors in Egypt. I think people were well aware of, like a few years ago, or about a year or so ago, that things aren't exactly stable there. As long as it doesn't basically, like you mentioned, disrupt the Suez Canal, it doesn't basically create, revolution in other Gulf states which are more important in terms of oil production. But the one question I have is, what if they have another election, and what if the Muslim Brotherhood wins again?
Well, we're going to have this democratic election until the right guy wins.
That's exactly. And I think that's the problem they had in Turkey as well. That, but luckily, Turkey's Prime Minister has been a bit smarter than Morsi has been. Maybe they had a bit more experience there, and he's kind of moved it away from the military, where there were military coups happening all the time. And a couple of years ago, after he'd been in power for a few years, he basically arrested the entire top brass of the military, and now he's in power there. But he's been a bit more stable. Morsi was a bit more erratic. He was very new to the job, and he didn't know what he was doing, basically.
But there is a move away from very tough Islamic rule, and I don't know whether I'm putting it in the right way, but I think there's more a shift towards centralism, more towards openness. And I think that's perhaps what some of the other nations fear.
Well, you know what's happened. I mean,
place,
Morocco, although it's got a royal family, Morocco is a secular state. It is an Islamic, but run on secular grounds. It hasn't had the same fundamental shifts that have come about as the rest of the Arab Spring seems to have had.
I think that's where people want, that's where I think the younger people want the economy. They want freedom of choice, particularly moving away from the suppression that we've seen. There was one very interesting fact I learned, and it was quite an interesting issue, and I'm not going to raise politics here, the Israeli-Palestinian one, but the chief rabbi of the UK has resigned, or he's stepped down now, and he made one point in an interview, and it was very clever. He said, that in Israel, some of the Palestinians have got more power than in their own countries or in some of the Arab. He says they can say what they like. They're able to get on a soapbox and talk and speak, and that they won't get arrested. It might not be the view of the populace. And that's a very interesting point, because I think in a lot of Arab states there's still a huge amount of suppression, where I think leaders have to just start to open up and give people a little more democracy, a little more thought.
Let's move away from democracy. This doesn't have a fundamental impact on what happens on markets. Give me 3 facts on the country of Chile.
Oh, Chile. Okay, I watched your show. I listened to your show last night.
You listened to my radio show, so you don't count. 3 facts about the country of Chile, David Shapiro.
I'll start with perhaps higher cities, I'm guessing. What about biggest copper producer?
Well, there's one fact. Okay, that's accurate.
That's about it.
It's long and thin.
Long and thin.
Capital Santiago.
Yeah.
But I have a point to make here. You know what? One of the reasons that Chile is doing so well, and that what the free marketeers have been saying for so long, is that basically Milton Friedman went to Chile at the invitation of the dictator Pinochet, and the reason that the Chilean economy does so much better than the rest of Latin America is some of the reforms that they put in place.
After they kicked him out.
After
they kicked Friedman out or Pinochet.
When Chile came into place, basically, it just basically made sure that Chile was a bit more liberal in terms of the economy than the other Latin American states, and that basically meant that they came to the top of the
if people are watching wondering why we've gone mad, we're not gone mad. The reason why we're talking about Chile, of course, that long skinny country down the side of Latin America, part of the Pacific Rim, huge copper producer, one of the biggest producers of salmon in the world, gives Scotland a run for its money. Plus, they're becoming a pretty dab hand at tourism as well, and a couple of other industries. The reason why we're interested is because one of their companies, family owned since 1922, is coming to buy Adcock Ingram. That's interesting, David Shapiro.
It is interesting because we know very little about the company. We know very little about the Chilean economy, other than it's a copper producer, and also I think Sun International have got a casino.
They do.
But and we know
which was open for a month and then had an earthquake and was closed for a year. Yes,
and it's still contributing quite a bit now to to the profits there. But I think the big worry is that, who are they? What do they do? This is a very much a family business and that. But their exposure to emerging markets very high. I like South America, and I like what's happening there, and I like a lot of our companies that are going there, particularly you've got the NASPERS, you've got SAB Miller going there. So I'm open-minded about it, but I'd like to know a lot more about it before, we accept, before we start accepting shares.
They're offering, what they're offering the shareholders in Adcock Ingram is a mixture of shares in a company called CFR, which is the share code. It's going to be very confusing for Richemont.
Yes.
But they're offering shares in CFR, this drugs producer, which is globalizing. It listed on the Santiago Stock Exchange in 2010, and they're globalizing their business. They're kind of trying to do out of Chile what Aspen did out of South Africa in terms of globalizing. It's a nifty trick. But the market isn't pricing in this deal. 65 Rand is where the share's trading at. The deal values Adcock at about 73 Rand and a few cents, because nobody knows what the component of shares versus cash is going to be.
And also the fact that it's non-binding. Also, I think probably has an impact on it as well. They have a non-binding, talks. There's going to be due diligence, and of course, all the hurdles you're going to go through. I mean, when it comes to something like the pharmaceutical industry, there's going to be a huge amount of hurdles to ensure that we get the supply of ARVs, etc., etc. And also, want us to look at the fact that if it does go through, Chile has a lot of free trade agreements around the world. It's going to give a huge ability to operate in markets that we may not have had the chance to otherwise if we just were based in South Africa entirely. And
if this company, CFR, lists on the JSE, it doesn't, unlike the whole takeover of by the Indian company of Cipla Medpro is gone. We would then have just one listing of a drugs manufacturer on the JSE, which would be Aspen. CFR, however, plans to have a secondary listing on the JSE. It gives you access to an Aspen-like company.
It does, but you don't want to just put your money in a company you know very little about. You know, is Mr. Weinstein, is he a Steven Saad, or you know, who is he? So we need to learn a lot more about it. If there's a big cash component, I think the deal will go through. But the problem is that if you look at the balance sheet, what little we know about it, you want to know how they're going to raise the cash to actually make a very sweet offer to Aspen. So still a lot of hurdles to go through.
Well, the Adcock Ingram deal on the table.
I
we'll
think
discuss it.
Bruce, I think it's going to make a lot of the other suitors more aggressive. So this story's not over.
So don't sell your Adcock
No,
shares just yet.
no.
Okay, absolutely interesting one. Purchasing Managers Index picking up, and this is an indication that there is economic activity happening. We're not creating jobs, but there is activity happening.
Yeah, I mean, look, I think it's 3 months in a row that we're above 50. Look, that's obviously a positive, but I mean, the growth signs we've seen in South Africa have not been anywhere sufficient to actually make a dent in terms of our unemployment rate, and that's the number one thing. South Africa has gotten to a point now where we have more wealth, people getting welfare, than who have jobs. And by any measure, that's unsustainable, despite what the SARS is coming out and saying at the moment. And I think the kind of growth that we need in the country needs to be significantly higher than what we are right now. So it's nice to have 3 months of good growth, but it's not anywhere sufficient.
No, 3 months do not a summer make.
The one thing they never tell us is where that growth is taking place. You know, which part of manufacturing is increasing.
We must go make more of that stuff.
Yeah, or you don't know what they're making more of it, and that's a problem. You know, so it's very hard to get a grip on manufacturing's increasing. In fact, we say that globally, manufacturing increasing, but where? You know, what are people buying?
Well, we know one sector that's not doing particularly well at the moment, and it's had another blood nose yesterday when AMCU refused to sign the peace agreement, which has been brokered over a period of a month by Kgalema Motlanthe, the deputy president. And AMCU is saying, well, we need to take this back to our members, guys. It's a brand new union grouping. It's finding its feet. But boy, we're drawing out any potential recovery for the mining industry, David, longer than it needs to be.
I think there are two aspects to that. Number one, the fact that they're not signing. The other thing that worries me is, will the people who actually signed the agreement honor it? You know, or if they feel something happens down in the mine, they just down tools and book, they're gone again, you know, sitting on the hill, smoking whatever they're doing and creating a rumpus. So I'm very concerned about the culture that we have, and it's all very well to smile and sign agreements and shake hands, but we've got to make sure that it's enforced and that we can actually get mining back on its feet again, because without mining, without manufacturing, boy, forget about it. You know,
are you
really
buying mining shares yet, David?
No. You know that, Bruce, I was a raging bull on mining, and
beginning of this year, you were
very strong on that. And as soon as you pick up on China, you know, as we started to pick up the nervousness coming through there, you say, okay, got this one wrong. And the one thing you must never do in the market is let your ego take command of your portfolio. Just made a mistake, run, look for something else. And I'm quite cautious about them. I was a big seller of Anglos, and at 230, I was the first one to say, this is as cheap as anything. You know, this is as cheap as you're going to get.
Cheaper now.
At 185.
Is it cheap enough?
Look, I think with the whole mining sector, the labor issues, AMCU is just too inexperienced. It hasn't gone through the kind of learning period that NUM has. Unfortunately, NUM has gone to such a big learning period that they're almost taking the side of the employer versus the employee, and they've lost the trust of the workers. But what amazes me about this pact is this pact has no, as David said, no penalties for disobedience, and it's a pact to obey the law.
You know what? I'm going to sign a contract to obey the law.
Yes.
Yeah.
Yes. Okay, but the question was, nice fluff on that one. Is Anglo-American cheap enough?
No, we are incredibly underweight on the resource sector. I mean, we are down well under half weight on resources at the moment.
But is Anglo-American cheap enough? Because it's, you got Mark Kirifani, who's gone from Anglo Gold Ashanti. I'm glad he did. I bet he's, although the share price of Anglos has fallen, Anglo Gold Ashanti's has fallen more. Mark Kirifani, if anyone's got a good chance of turning that business around, is it him?
You know what the pointer is? The fact that last week they announced that they're looking to sell a share of Minas Rios, a minority share, but it's still a big chunk. Once companies are now starting to downgrade their projects, you start to get worried. It means they're shrinking, they're downsizing. Where are they going to get the revenue? You know, that's my concern. The fact that they're actually scrapping them means that they don't see demand lasting.
They don't see demand lasting, or they have overcapitalized to such a huge extent on Minas Rio that they've got to try and recoup some of that loss. Surely that's a smart move.
It is a smart move, but it comes with impairments.
Yes, okay. So the indication is that management doesn't have confidence in the next 4 to 5 years.
Absolutely. And that's what concerned me, that they're not quite sure where they're going to be in 4 years. So let's wait on the side, you know.
Tonight's nearly impossible question then. Actually, it is an impossible question. What's a fair price for Anglo?
Probably lower than here. I mean,
of course, that's not an
but
answer.
what David said is important, Jay. Look, we've experienced a decade and a half of incredible commodity price growth. Why? Because we've had 5 decades of the world's largest country by population growing at almost double-digit growth rates, which is unprecedented and cannot continue. We may have come to the end of this commodity cycle, and if that's the case here, these stock prices may be inflated 5 years down the line, 10 years down the line. When we're looking at them, what we looked at, say, Harmony, right now compared to 5 years ago.
What people don't realize is that before we had the super cycle in the Chinese super cycle, or driven by the Chinese demand, we had a 20-year bear market in commodities. You go back to your a chart, or commodity chart, you'll see that downward slope right until the early 2000s when it just suddenly took up. So we can go into that again, and that's where you need good miners. You still make profits there, but you need miners who know how to mine efficiently, keep costs under control.
I'm not giving you guys a break until you tell me what's a fair price for Anglo.
I would say we're about 10% away from it.
Okay, so so you'd pay $160?
Yeah, in
165.
Remember, they went in 2008. I think they went down to about 138 or 128, 130 around there.
But you'd be happy
it's
to
not
lose
impossible.
You'd be happy to lose a little bit of money from 165.
Yes.
Okay.
I think we're coming down to. It's not time. It'll take time for it to turn around. But
Viv, come on, give me a price.
Lower than that.
Lower than that. 140?
Look, I do think that the mining sector, I mean, unless we see signs of China recovering, if we don't see China recovering and demand picking up for resources from there, I'm not a buyer of miners, period.
Okay, he's being so difficult this evening, but at least he's being slow. And more from David Shapiro and Viv. I can slow down if I'm put under enough pressure. Governor in just a moment.